Good morning, traders, and this is your Dow Jones daily review. Okay, so we had pretty much a nothing day yesterday. I suppose typical for a Monday, but there is so much going on the political front, and there is FOMC minutes coming out today. We've got the trade war talk still carrying on in Washington at the moment, So, there's a lot that the market's waiting for before they start getting involved in buying or selling of stocks again. So for me at this stage, it's more than likely sit on hands today. Maybe come in later this afternoon or later tonight, South African time, sort of midday US session, just to see what the result of the FOMC minutes is, to see whether that drives the market in a direction and pick up a trade there. But for me at this stage, trend is still up. This is a bit of a warning bell that we are pretty tired, and we are very tired on the weekly as well, if you look at the oscillators right now. So I said to you, this could be an exhaustion bar. It is very possible. But until we see what happens, we're going to have to wait and see what this is. So this was a V reversal, and I'm still very skeptical of V reversals. So you sort of had something here that looked like a turn, and then you've got this exhaustion bar afterwards on the weekly. So I'm very cautious at this stage as to which direction we're going. If we start looking at the 4 minute, the 4 hour, not the 4 minute, you'll see that we are ranging. Okay, and I suppose you need to take the holiday period, which is these nothing bars here, out of the equation completely. So there's an inside tail there, came and tested again. Okay, that's our new high, so that's a break we need above, and this is the break we need below. Okay, so at this stage, that's what is looking like at the moment. We do have this inside bar on the 4 hour, and that is an indication that we're going to move to the downside. So, the trade is normally a break below this bar, which is what we've got at the moment, with a stop above there. Okay, that's 120 point stop loss, which is an acceptable, how to put it, an acceptable risk for me, but it's against the trend. So against the trend, I'm not really interested in it. Okay, so that was the original trend line there. We did break it, and then we broke it back above it. So we'd have to make that the new trend line at the moment. And I think if we extend it further back, no, it doesn't go back. Okay. So anyway, so there's no trend line to bounce off at the moment. I'm still of the opinion that this level down here is one that we need to pay attention to. And I just want to work out whether this range break will get us there. Yep, pretty spot on. Okay. So that's still, of my opinion, is this area here at 25,620 is the one we need to pay attention to. Now, bear one thing in mind. When the market is awaiting Fed minutes or some information that is going to drive the market pretty hard, it often moves in the opposite direction to what is going to happen when the news comes out. Just bear that in mind. So if we do start moving to the downside, doesn't necessarily mean that the news is going to be bad and we are going to push it to the downside. What it does mean is that the market is being not manipulated, but people are waiting at a better level to get in on that trade. So this is definitely an area that I would pay attention to. Okay, so this is 25,620. Right, now if we just come to the hour, you'll see we have a mini trend here which has broken. And this was the trend of yesterday. Okay, so there it is there. It stayed intact for the whole of yesterday, and then we've broken through it this morning. Okay, awesome oscillator, there's nothing going on here. So I'm a bit weary of taking a trade now, but during the European session, if you do see any sort of bounce up here, you may be tempted, just keep those stops really tight just to take a scalp. If we do break below this level of 25,796, then you do have potential for us to hit 26,620. Okay, but 26,620 and between 26,620 and the 1 hour 200 EMA, which will be sitting at 25,500 area, that is the area that I'll be looking for price action to indicate that we have a potential turn. Okay, so just bear in mind that that is the one area which looks like the most logical area, but obviously sometimes it doesn't. It's not an exact science. And then you've got this tail and this tail here at 25,550 area, which could also hold up price. Okay, so that's kind of the zone that I'm paying attention to. We also may never get there, so we may just come test the bottom here and then rally back to this area and sort of do this through the day and keep this as the range right now. Okay, so I think for me it's a day of keeping my money in my pocket and waiting for the news to play out and then looking at the trades tomorrow again. If you are going to trade this and you've got the time, I would strongly suggest getting down to a 5-6 minute chart and trade that accordingly. Okay, the rules are the same. It's just that your take profit areas are a lot less. So you can see here, a strong move up, consolidation, second move up, take profit, reverse trend. So you can keep you can trade it on the lower time frames. It just means you need to sit in front of the computer and watch the charts pretty much all the time. Okay, so for me, it's not something that I like doing. Done it before, not my favorite pastime. So I will wait for a decent setup. Okay, at this stage, I think we're going to range, to be honest, until later on. And what may happen as well is you may get some negative news coming out of the Fed minutes, which will drive price down into the zone and buyers will step in again. Okay, so anyway, guys, that's my view for today, is really just sit on your hands, wait for the news to play out, and then look for a better setup at a later stage. Hope that helps, and enjoy your day. Whatever you do, keep those stops really tight, and I'll catch up with you later. Cheers for now.